Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, September 6th, 2023. I am Frank Ochoa, aka PivotBoss. Happy hump day, everyone. Real quickly here, back at pivotboss.com/events. Today is day 2 here. If you click on Bootcamp down here today, day 2 of our live series here where we are discussing our various signals that we'll be using. Yesterday we went over the MGR signal here, a fantastic signal, and that recording has already been posted for our members here. Today, extreme reversal. So if you are going to be with us here, join us at 11 a.m. in the room here. We're going to go over the extreme reversal signal. If you are not a member of the room yet, there's still time. You can come up here, click here to get started, use the coupon code below to get 1 free month of our premium trading room access, and from there you have access to this week's training, which is free and included. Now, thank you for those of you that joined us for the monthly Outlook webinar in the previous session. The recording link is in the description below if you want to rewatch that recording. All right, let's take a look here at the ES in the daily time frame. You'll see here narrow multi-day range, 4-day range here, very compressed. We could be looking easily at 100 and 140 point move up ahead for this market on a 4-day range breakout basis. Perhaps we turn into a 5-day range, 6-day range. We'll see how it develops. We do have some pre-market economic data points coming out here an hour prior to the RTH open. Exports, imports, and trade balance. We also have S&P Global Services PMI, ISM non-manufacturing PMI, and later on today, 1 o'clock p.m. Central Time this afternoon, Beige Book will be released. So we do have some steady trickle here of economic data points throughout the day, so it could lead to a decent sized day. Now keep an eye on the previous session's low here. If price starts to push back above the previous session's low, it could open up a fade back up within the 4-day range, becoming a 5-day range. Perhaps a return back to the previous month's close price could be a good short-term target. Any failure to hold this zone here will be very important. That's the previous month's midpoint. We start to fall hard through there and fail at that level. The only level left to go test will be the previous lows. So again, we are building up energy here that could be 100 to 140 points of range. If we do get a breakout from this range, look for about 100 to 140 points in the direction of the break. The most bullish scenario would be, say, a strong failure to the downside, a rejection of that move lower, followed by a strong higher low. That could open up a very bullish move ahead, but that needs to be proven out still. All right, let's take a look here at the ES. Now, the ES is forming a similar pattern here. You can see, again, a 4-day narrow range, now a 5-day developing narrow range, inside day ahead of pre-market economic data points here. Again, the most bullish scenario, given how this was a strong higher low following a strong pivot lower high, that right there pushing through the previous pivot high and now consolidating at these highs after that recent move, that can tend to be quite bullish. We also have a lower value relationship here on the monthly pivot range with a bullish close. So any pullback into as deep as this midpoint could be defended for a shot at these previous highs. So right now the NQ looking a bit more bullish here, but very neutral right now, but more bullish. If you can see how we've gotten a higher low now and through the prior pivot higher high. Now a narrow range. Any strong failure and rejection of that move could be a buying opportunity for the edge. So there is a bullish bias that could develop out of this range. But again, got to see which way we break out from this narrow developing range. If it's a strong downside break with a stop run day down, that could be an indication that we may be headed back within the range below. So this pivot high is going to be very important. That's 15,400. Taking a look now at crude oil. Crude with tremendous strength here recently, rallying up to as high as the 88s in the previous session, holding now completely above 85s. Inside day, the idea here behind yesterday's range is likely that it was wide enough to keep prices in check here for the next several days with an upward bias. This has been a headline driven market here and so far it has shaken off weakness. It has reclaimed the 679 level after a big strong break through that level, and in reclaiming it, it has now pushed back to highs. Now we are above the prior pivot highs here. That 85 prior pivot high was a strong one. So if we fail back below that prior pivot high, it could open up a return to 78s as we continue to remain in this larger trading range. So 85 will continue to be important here up ahead. And from a market structure perspective, we've talked about the 84 and the key levels on the fours. So the 84 level being here, you have the 74 level, which is about here, the 64 level about there, and the next level above would be 94, which is here. So to push through 84, as long as 84 holds here, especially on any major pullback, we could be looking at a continuation toward 94 up ahead. So really it's the fours that's really going to matter the most here. If it fails to hold the fours, it opens up 78 back below. So keep an eye on yesterday's boundaries, as those are the key levels to continue to watch. Looking at gold here, gold right now pretty much sideways at the moment. It's again, saw a bit of selling pressure in the previous session, failed new high, midpoint retest, nearly a stop run day down, a violation of the previous month's midpoint. Today, super narrow range at the moment, just 6 points of range, a developing potential extreme reversal here, thrust reversal. So overall, this market right now quite bearish, with the recent move to begin the month. But we are still kind of at the center of this rider range. We're still bouncing basically between 1910 and 2000, and if we're going to drop back down, we could be looking at a return back to recent lows, especially the previous month's low up ahead. So any pullback could be a selling opportunity until price is really able to reclaim the previous month's mid and close. So right now, given this drop, any pullback could be sold for a continuation into this zone up ahead. So continue to watch this one here as it shows a bit of weakness here. Now, looking at the YM here has now reached the midpoint of that developing key range. On this low here, price rallies up to that high 35,177, and on that day we mentioned that's a strong enough high to suggest a midpoint return to the 34,619s. And if we get the 34,619s rather quickly, we have ourselves a new key range, and now we do. So the edges are in for this key range. It's a good one. It's a really good one. And if you look at this from a bullish lens, for example, the 33.8 right here is the next key level down. Obviously you have 34.8, and then here you have 35.8, and those have been the big levels on the 8s. Obviously you also have right down here the 32.8 as well. So if price drops below the key range low here at some point down the road, and there's a trap below the key range low, that could coincide with 33.8 and lead to a return back higher within the range. So we could be looking at quite a bit of strength ahead. Upside 100% target would be 36,292. 50% extension would coincide with recent highs. So now that we have ourselves a key range, things start to highlight themselves in terms of potential entries and potential targets down the road. So keep an eye on this level here as we continue to build out within that range. Now in the near term, can price stay below this low? If not, we could be looking at a continuation to the downside or a push back up, depending on how it reacts to this low. If it can bounce back above the low, we could trade back within the range, and really we're kind of channeling down a little bit here. But a failure outright through that level, and you're opening up the downside again, down back toward the previous month's low price. So keep an eye on the previous session's low price. How does price respond to that level here today? All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.